Well, greetings. I hope I find all of you well today. Thanks for joining us. So I'm Tom Kuhn from Qnity. We are here to create a simpler and more direct path towards greater prosperity for you and your stakeholders and your team, and applying the new rules of engagement, which is simple, visual, and actionable. So as we think of return on investment, we look at something called ATM. Making sure we have a high return on our attention, time, and money. And it's not lost on us that your time is precious. So thanks for joining us today. Our brain trust, Lightheart Sanders, CPAs, including the one and only Jared Sanders.
Morning, Tom.
How are you, Jared?
I'm doing phenomenal.
So you were at the Phil. And at the very end, we literally went around and we gave everybody $1 million. We gave everybody $1 million bill. Okay. And it was just a fun little closing exercise to just get people to really speak about their priorities and growth and that kind of stuff. And Jared, you were quite taken by many of us by the consistency. Such a high percentage of people said the same thing. That what they would do is they would invest in real estate. They would buy their building. They would invest in real estate for their business. Now, were you surprised by that?
I was surprised, I guess, in terms of the consistency across the board. I mean, it's from a business growth standpoint, from long-term perspective. Hopefully, most business owners have that goal in terms of owning the real estate, creating your own revenue stream coming back to you. You're not paying somebody else's mortgage. Those thoughts go through your mind. What did kind of surprise me is just it got me thinking about where's the holdup? Like, what's the bottleneck? Where it was surprising to me that there were so many that seemed to still be in the rent stage versus the ownership stage. Or maybe you just phenomenally picked everybody that's still renting. But it got me wondering, like, what's preventing people from taking that final or next step in terms of the growth from an overall net worth and value. And so, that got us thinking in terms of especially this discussion as well. It's like, what questions can we help to answer? Because a lot of times, it just seems like it's this barrier, right? Like you think, oh, is the issue that you think that you need to have $1 million to actually be able to take that next step? Or is it just a lack of knowledge in terms of what's potentially out there, and where do you go? Like, are we waiting till we're perfectly ready to become an owner of a building? Or is it just that we don't know what the next steps are?
So you're going to take us through some of those steps today, right?
Yeah, I thought we could just talk a little bit about what exactly it would take. What things do you need to be considering as it relates to building? And really, one of the things that all of your programs do is it talks about planning with purpose, having a goal in mind in terms of your weekly meetings and stuff like that. Like, how much do you really need to have saved up for this investment? What do you need to see from a financial standpoint? Do I have to show a ridiculous amount of revenue to cover this loan, or those types of questions that come in? So I thought we'd just take a little bit of time and discuss it.
So I'll turn it over to you in just a moment here to kind of take us through some steps, and then I'll chime in as appropriate. Where I have seen this the most is, as many of you may or may not know, I spent a significant number of years and work with a large number of clients related with transition planning. I don't do much of it anymore, but in that work, I really found that many owners that are, were selling their business were also had real estate too. And it always created such an exciting thing for the seller of the business, because now they have two assets, and it gave them flexibility. They could keep the real estate and sell the business, or they could package the two and sell it together, or they could do an option for the future buyer. But it put them in such a favorable financial position. So that's where I've seen it the most. And so I love this conversation. So take us through some of the steps and some of the questions to ask and answer, for people that might be interested in this, or even if you're not interested in it, this is just really important education.
Sure. So, obviously the first part to say, we always step back and say, okay, like, who have you surrounded yourself with, right? So the first question that I would have is how well do you know your banker? Do you have a relationship with somebody at the bank where, you can have conversations about what loan products are available, what credit score are they looking for, what down payment percentage and stuff like that? Or do you have a relationship with your banker where it's like, yeah, this is where I opened up my account and I make my deposits, and they call me when it's in overdraft or when they've got a question, and it's more transactional. So if you don't have a relationship with a lender at the bank, that would be the first area that I look for, is simply to find a good lender, a good banker that has access and a knowledge to the different products that are out there, because there are different options. Like sometimes we think, okay, like real estate, I've got to go in, I'm going to get a commercial loan. It's going to be, I'm going to have like 30-40% down or 20% down, and it's going to be a high interest rate and stuff like that. You want to make sure that you've got a banker that can bring you different potential products. Like, for example, a lot of companies, a lot of small business will try and take advantage of Sba Loans, the program that will help it. It allows you to have a little bit less down payment, usually a lot more favorable credit score requirements to get that. And so, making sure that your banker that you are using can bring you enough of the different options, and have a real good, honest discussion with them about what are the requirements to get that loan. The things that you'll need to know is credit score. Obviously, they're going to look at your credit. That's natural part of any lending aspect and stuff like that. But depending on the program that you've got, just like a home mortgage, there's different programs for great credit. There's also programs for less than great credit, but at least knowing what that number is so that you can then get working on your personal side to get to it. So you'll want to have that conversation. Next conversation that you want to have is what kind of down payment, right? So if you have a general idea of what you think that your business, you're building, if you're looking to buy the building that you're existing, leasing or hoping to, what that dollar amount might be, that'll give you an idea of what kind of down payment you'll need to have. And also just in terms of what the potential loan looks like. For a lot of bankers, when they look at it, like if you've had consistent rent payments of a certain dollar amount for years, that gives evidence that, okay, like you could transition at least that dollar amount, into a potential commercial loan. So number one would be have that conversation with your banker to make sure that he understands what your long-term goals are, right? Like I think a lot of times we meet with CPAs, we meet with attorneys, we meet with bankers, and it's very transactional. Like it's like, okay, I need my tax return done, so go get the tax return done. And we don't have the conversations about where am I going? Like what's my goal? Where am I trying to do with my business? And we just kind of left out in the dark and failing to capitalize on the intellectual capital that's around you. So, having that conversation with your banker to say, look, I want to own a building, and I need to know exactly where I need to get to qualify, and make sure that he's got those options, make sure that he or she can tell you about what the bank can offer. Obviously, sometimes if you're running a lot of business through the bank in terms of a lot of your deposits and stuff, you got a high volume going through, that creates a relationship that the bank wants to keep. And so they'll usually, they can work with you along those. Then after that, getting those actual requirements, then having those conversations, obviously with your CPA, with your team and stuff like that, in terms of, okay, this is where we need to get to the next step. Whether it's increase your own personal credit score or setting aside money to actually have that down payment, or working on the working on the financial aspects of the business so that it is showing the profit that it needs to qualify for that loan.
This is great information. There's a lot of different ways to approach this, and there's a lot of different variations of owning real estate. It could be a single location, a standalone property. I know we have several people on this call that do that. They have a separate structure. Maybe it's a really cool home that was converted into a business. I've seen that. There's also a real estate transaction that includes other tenants. So single use for the owning and operating of one tenant, namely the business, or it's where you've got where you actually have other revenue coming in from another tenant. A lot of that really depends on the market where you're at right now. And so there's a lot of different ways to approach this and a lot of different situations, Jared. So I think that your point about getting really good advice is always the first place to start, right?
Yeah. And, there's, you want to think about like, what do you want to take on, right? Like, I think for a lot of salon owners, we're entrepreneurial in our mindset. And so this concept of creating multiple revenue streams, I love the idea in terms of from a transitional standpoint, in terms of having that secondary asset that you've built up. It's, if it's just a single location, it's not that big of a jump to become your own landlord, right? Other than the headache of making, you can't call somebody to fix something. It's going to come to you. And so it's a small jump to just say, we're going to take on that little responsibility. But it then generates a secondary asset under your belt that can be a revenue stream later, and I love the idea in terms of transition planning. If you sell the salon but keep the building, that can be some income generating, for your lifetime, or something to pass down, or you've just added another asset to the package of whatever you're going to sell. And there's obviously the tax benefits, right? Like a lot of people always focus on, well, the main reason I want to do it is because I keep hearing that that's the smart thing to do from a tax benefit. And it is, because in a tax situation, you're creating a depreciation, right? So you take the cost of that building and you're able to take that as an expense and spread it out. So you're getting a deduction, even though you're not spending cash for that deduction. And so it allows you to tax plan from that standpoint, and gives you an asset, and it, that's appreciating in general. Hopefully most real estate over time appreciates in value, but from a tax standpoint, it's actually, you depreciate it. So you get a good cash flow without having to pay taxes in that time period. So there's that advantage. And then if you're looking in terms of your overall growth, and this is an area that you want to increase it, having additional tenants, right? So most commercial loans are going to look for you to utilize at least 51% of the building. But that other 49% could be offset by other tenants. So it'll allow you to get a bigger asset, but then you have to balance that with, do I want to be a landlord? Do I want to, do I want to have to find somebody to rent that other space out? And then do I want to deal with the headaches of when something breaks over in their things, I got to stop what I'm doing. But again, it's about expanding that different revenue stream and giving you that opportunity and continuing to grow. At the end of the day, when you're ready to retire, now you've got, a much bigger asset to sell, or you sell off the salon side of things and you continue to have that commercial property to generate payments to you going forward.
The one thing I do feel strongly about, and I know you agree, and I'm sure your partner Kevin, who's on the call today, would agree with this too, is that keep the real estate in a separate business. Now, all it takes is a few stories to anchor that home. And I'll give you one. I mean, I was involved with an owner, very successful business, and he wanted to bring in a partner in the business, a key employee. And but the real estate was in the same business as the salon company, and which ultimately delayed the whole transaction over a year. Because everybody felt strongly that the real estate was not part of this ownership transaction of the key employee. It needed to be separated. So separating it, when they're commingled in the same business, it takes a lot more effort to separate them than it does at the very beginning, just to put them in two separate. I mean, it's a very simple tip. It's a very simple thing. And I in most cases, I've seen they are in separate businesses. But if they're not, be prepared for some of your options to be limited in the future. Is that a fair summation?
Yeah, because with real estate, you're dealing with deeds, you're dealing with mortgages, loans that are tied to it, and stuff like that. And so, if you go into the process and just include it in the business, your salon business entity. Then when you come to a point where you're like, okay, wait, I want to split these for transition purposes and stuff like that, you're gonna end up with a situation where you got to get the bank to sign off, or get commercial, whoever's holding the note, and you got to change the deed over, and get those all things, as well as just the corporate shield, right? So it's much easier to create a separate entity at the beginning and have that business, or have the property over in that other business, and that creates that shield. So now that you own your building, of course, somebody comes in, slips and falls on the sidewalk, they're going to sue you, obviously, because that's what we do in this day and age. That ends up, if it's all in one entity, now all of a sudden all your salon assets are potentially could be sucked up by that lawsuit. Whereas if it's in a separate entity, there's that corporate shield. It's the business, it's the property and stuff. So it limits a little bit of your exposure, but then also down the line and stuff like that, it just is an easier transaction to handle, give you that flexibility.
One other story, and stories that really I think are useful to other people, is also when it creates to owning the two assets, owning a business as an asset and owning real estate as an asset. I recall another transaction I was involved in, and they were in separate companies. Actually, the real estate was in the personal name of the owners, still a separate entity. And then the business was in a corporation. And one of the things I was really trying to get the seller to do is say, don't quote one number. Don't quote, this is what it's all worth. You really have to do a valuation for the business, and you have to do a valuation for the real estate. That's two different completely ways of valuing. Valuing the real estate is going to be based upon a market study, appraisal, et cetera. And so the other sort of pet peeve of mine, and where I've seen also a lot of confusion, is when there's a commingling of the assets, makes it very difficult to do a valuation. So anyway, that's I wanted to throw my 2 cents in on that too. All right, I'm gonna now regarding financing. Financing real estate and these type of transactions have often been at the favor of those making public policy. So oftentimes we do see incentives, whether it's a local, a regional, national, state, or whatever, special incentives to help people buy commercial real estate, the SBA, two most common SBA is a 7A. And then I can never remember the digits on it. It's 50. Is it, because I get it mixed up with a nonprofit number? What is it? It's 50.
50 something.
Yeah. Oh, God.
I'm the same way.
Well, anyway, and I'm not a banker. You're not a banker either. And, you started out by saying, talk to a banker, but my most recent understanding, and someone can correct me that is a little bit more up to speed on these matters, but the 7A does not offer any preferential treatment as it relates to, for example, female ownership or whatever. And I say whatever, I shouldn't be so dismissive, others that may not have had, others that we might want to provide a greater advantage to help because they haven't had the advantage. Okay. But the other SBA financing does allow some concessions, and it is favorable for female ownership, et cetera. So that was something that I learned with SBA, because there's this myth that if you're getting a 7A, you're buying a business. We got several people on here that bought a business with a SBA loan, but it's really more on the real estate side that we see some concessions. Any thoughts on that?
Yeah, I do know that there are different programs that have been set up to try and encourage investment in this area, right? And so and that would be something I would definitely talk to the banker to see what they know, because there are state grants, there are community grants if you're going into a specific area and stuff like that are very very carved out for specific demographics or individuals. So I do know the 7A program is their broad generic program that everybody qualifies. There's no moving to the front of the line or getting preferential treatment and stuff like that, but you can also offset that. So I do know, here in Mississippi, I have a good friend that's a banker that he spends his whole time in that grant program in terms of first-time home buyers and different demographics and stuff like that. And there is a wealth of opportunity out there, especially if you fall under that minority definition in whichever way it is, female, or whatever that things there are different programs out there to motivate or to encourage investment in that. So, that's why I say having a relationship with a banker that is open to or has access to those programs, so that you're not leaving on table. He may be able to come back and say, well, look, right now the state of Mississippi has got this other program where they are helping you with the down payment into an SBA loan of a certain dollar amount and stuff like that. And so having that breadth, that's what I'm saying in terms of the banker that you use, making sure that they have access to all of those can really open up doors, right? Because if we're stepping back and saying, okay, the barrier is I don't know where to go, or is the barrier I just don't seem to be able to set aside enough money to make this transaction happen, then having access or knowing somebody that has access, right, is it can really make the difference between getting this now versus later, right? And so I noticed Vanessa in the comments also talks about having a relationship with an attorney in real estate and contract law. I completely agree. It's again, to me, it's if you're going to be entrepreneurial in your approach, then you really want to make sure that you surround yourself with a variety of professionals, because you don't have time to be an expert grant writer to know all the grant opportunities out there, and to be an expert banker to know the SBA loans requirements, stuff like that, and be a CPA or an accountant and have your financials and the real estate, right? So, it's important to, instead of trying to be an expert in all of those, to surround yourself with, individuals that have that. And maybe it's just from the professional standpoint that I come from, in terms of seeing so many people that they're trying to run the salon and also be an accountant and also be an attorney and also be a banker, and you lose out on those opportunities and growth instead of really focusing on what you're really good at, and where your passion is, and allow professionals around you to fill up and to increase that capacity. You'll end up getting a lot further than trying to hold back and try and keep all those balls by yourself.
Jared, great to spend time with you. This means you get another $1 million. You get $1 million now. You get another $1 million. You get $1 million light bulb. And so I thanks for joining us today.
I appreciate it. It's always fun.
And let's all give Jared a virtual round of applause. Give Jared a little shout out for his time. The name of the firm is Lightheart Sanders. They are in Mississippi and South Carolina, and great resources for us. So thanks for joining us, Jared.
Thanks, Tom.
Thanks to all of you for joining us today. Sponsors, Lightheart Sanders are a sponsor of this, as well as Pivot Point. Please watch for information on our financial wellness program that you can bring into your business. And it's called Money Pro. We also, as I mentioned, we have a live workshop in Minnesota here, Money SBO, led by Candace Gliato. We're thrilled to be in the schools. And if you want more information about any of these things, you can go to the Qnity website. You can also go to qnityforschools.com. Closing thoughts. I'm just glad that we've turned the corner into the second half of the year. There was a conversation I had yesterday, like, what's the state of the union? What are people thinking? What are they feeling? Are they optimistic? And I find that most of the people I talk to have in the back of their mind a recession. And at the same time, there's, I think, a high degree of bullish and excitement about everybody's business. Everybody seems to be hunkered down on having great steps to growth. And so we hope to be just that weekly light bulb moment to bring you into community and conversation. So it's great to have Jared back with us. You're going to get to see and hear more from Sonia going forward. I think what we'll do is we will call it a wrap today. And if I missed any shout outs to anybody, or if I missed anything, put it in the chat. But otherwise, we hope to see you next week for episode number 89. Gosh, we're going to be at over 100. Technically, we're actually over 100 because we did about 20 school roundtables before we merged them together. So yeah, we're at about 125 or something like that. So, all right, guys, thanks for joining us today. We hope to see you next week. And thanks again for those of you that joined us today. Bye now.